We begin with Jo Ling Kent on the Fed Reserve's turn toward lower interest rates. Jo Ling, it's always great to have you. This is a day where it matters as much what the Federal Reserve did as what Jerome Powell said about what it did and what it may do. Break it down for us.
Well, we got our first rate cut of the year, the first in 9 months. So that's welcome news for people who are looking to borrow money, whether it's for a mortgage, a car loan, your credit card debt, and on down the line. We also did get an indication that there may be 2 more interest rate cuts this year and then 1 coming in 2026. As for the economy, Chair Powell did acknowledge that the labor market is weakening and the persistent inflation picture. As for why the labor market is weakening, he actually believes that it has to do with immigration policies as he looks at the broader economic situation. Powell did, of course, steer clear of politics, declining to answer questions about his future at these Fed pressers going forward. He, of course, has a term that expires mid-next year.
Jo Ling, that immigration component seems to be an interesting and newly added part of the conversation. What was the Fed chair driving at, and what does it suggest about future trend lines for the job market?
Yeah, he talked about the supply of labor, and he also talked about tariffs a little bit as well, answering a question about what is the actual impact on prices. He says it's not major, but it's also not minor, right? It still has a material impact on the prices that you are paying, perhaps at the grocery store. And they want to keep that price stability, inflation in check, while also trying to support a healthy labor market at full employment. So this is the dance that the Federal Reserve is trying to do as it approaches the end of the year, as it indicates how it wants to handle interest rates when it comes to 2 more possible cuts major.
Jo Ling Kent, as always, thank you so very, very much.